Breaking news. Breaking news, boys. Embattled crypto lender Celsius files for bankruptcy protection. Crypto company Celsius announced it began the process of filing for Chapter 11 bankruptcy protection. Celsius made headlines a month ago after freezing customer accounts, blaming extreme market conditions, and joins a list of other high-profile bankruptcies. Crypto company Celsius announced it began the process of filing for Chapter 11 bankruptcy protection. In a Wednesday statement, the company said it has $167 million in cash on hand to support operations during the restructuring process. Earlier, CNBC reported the company's lawyers were notifying individual U.S. state regulators of Wednesday evening, as of Wednesday evening, according to the source, who asked not to be named because the proceedings were private. The Hoboken, New Jersey-based company made headlines a month ago after freezing customer accounts, blaming extreme market conditions. The news marks the latest of high-profile crypto bankruptcy as prices plummet. We saw them take that Ethereum and send it to an unknown wallet just this morning. Voyager filed for Chapter 11 bankruptcy protection last week after suffering losses due to exposure to now defunct hedge fund Three Arrows Capital. A judge in New York bankruptcy court froze the Three Arrows Capital remaining assets this week. The fund is now in the process of liquidation proceedings. Unfortunately, this was expected. It was anticipated. It does not, however, stop our investigations. We will continue investigating the company and working to protect its clients even though it's insolvency, said Joseph Rotunda, director of enforcement at the Texas State Securities Board, said of the Celsius bankruptcy filing. Celsius did not immediately respond to CNBC's request for comment. The company was one of the largest players in the crypto lending space, with more than $8 billion in loans to clients and almost $12 billion in assets under management as of May. Celsius said it had 1.7 million customers as of June and was competing with its interest-bearing accounts and yields as high as 17%. The firm would lend customers crypto out to counterparties willing to pay a sky-high interest rate to borrow it. Celsius would then split some of that revenue with its users. But the structure came crashing down amid a liquidity crunch in the industry. The company was sued last week by a former investment manager who alleged Celsius failed to hedge risk, artificially inflated the price of its own digital coin, and engaged in activities that amounted to fraud. 6 state regulators have already launched investigations into Celsius. Vermont became the latest to do so earlier on Wednesday. The state's Department of Financial Regulation said Celsius deployed customer assets in a variety of risky and illiquid investments, trading, and lending activities. Celsius customers did not receive critical disclosures about its financial condition, investing activities, risk factors, and the ability to repay its obligations to debtors and other creditors. The Vermont regulator said in a statement, the company's assets and investments are probably inadequate to cover its outstanding obligations. There you go. Ooh, and they're moving those funds out, bro. Look how bad I'm sweating. This is terrible in here. I need to take my shirt off, really. It's so hot, but instead we're going to shut this miner down real quick. Oh no, the keyboard's not plugged in.